Hi everyone, welcome back to my YouTube channel Manu Issue ACCA classes. In today's video, we are diving into the another topic that is variance analysis, which is the key topic in the performance management as well as in our management accounting, that is F2. Trust me, by the end of this video, you will not only understand how to calculate the variance, but also you will be pro how to interpret them as well as what lead to causes of those variances. I have covered calculation, interpretation along with the causes of this variance of all the variance that we calculated in the F2 or F5. So let's start. So first, let's understand what the variance analysis mean. Variance analysis is the process by which the total difference between the standard and the actual result is analyzed. So we used to set the standard, then when actual data is arrive, in that case we used to analyze the difference between the standard that we have been set and the actual result that we got. So we will analyze the difference between these two. So this is known as variance analysis. So in the variance analysis, we used to calculate lot of variance like sales variance, material variance, labor variance, variable overhead variance, fixed overhead variance, mixed yield variance, planning and operational variance. So first five is very important for the F2 student, and the last is the advanced variance, which is useful for the F5 student. So now, while calculating the variance, you might have seen the term F or A. So F stands for favorable and A stands for adverse. So now how can we figure out when the variance result will be favorable or when the variance result will be adverse? So I have tips for you. So how to decide whether variance is favorable or adverse? So tips is, if results are better than expected, then the variance is favorable and we used to keep F after the calculation or difference that we arrived. But if the results are worse than expected, in that case variance is adverse and we need to put the letter A in the difference we calculated. Okay. So now, important thing is that in this chapter is you should know how to calculate all the variance involved and also able to explain the meaning of variance that you have calculated, and if possible you need to give the reason for the variance, that is means the causes, possible causes, right? So I have covered everything this time in this three topic for every variance. So stay tuned with this video till end. So now first is sales variance. So this is also useful for the F2 as well as F5 student. So first is the sales variance. See, if the question asks you to calculate the sales variance or the total sales variance, in that case it means you need to calculate the both sales price variance as well as sales volume variance, and then you need to add these two. Then after adding these two variance, you will get the total sales variance. Okay, so if the question simply asks to calculate the total sales variance or the sales variance, it means you need to calculate the sales price variance and the sales volume variance, and you need to add both of these two. Okay. So now formula for to calculate this sales price variance is, the name itself suggests that the variance in the price, selling price. So we will take the actual selling price and the budgeted selling price, then we will figure out the difference of these two. Then we will multiply the difference with the actual quantity we have been sold out. Right? But in case of sales volume variance, how we can calculate? Again, name itself suggests the volume. Volume means your quantity. So we will take the actual quantity minus the budgeted quantity, and then we will multiply with the standard contribution per unit if we are using the marginal costing system. But if we are using the absorption costing system, in that case we will use standard profit per unit. Remember, here in case of volume, this will difference will arise like standard contribution or standard profit depending on the which system we are using. But the sales price variance will be same for the both of this system. So this is quite easy. So in the price variance, the name itself suggests the difference between price. So we will take the actual figure and the budgeted figure. Then we will find out the difference and watch what actual quantity we sold out. We need to multiply with it. And for the sales volume variance, we will take the actual quantity sold and the budgeted quantity sold, and then we will multiply with the contribution if we are using the marginal costing system, and if we will multiply with the standard profit if we are using the absorption costing system. So now this is the calculation part. Now come to the interpretation. Now if question asks you to interpret what that mean, so in that case what you need to say is, if we are calculating the sales price variance, it shows that effect on the profit of selling goods at a different price from the expected one. But if we are calculating the sales volume variance, that means it calculates the effect on the profit of actual sales volume being different from the budgeted. Okay. So this is the interpretation. So now what leads to cause this variance? Let's figure out. And there will be favorable as well as adverse. I have told at the start of this video. So now if someone asks what causes the sales price variance, so you know the formula. It's actual selling price minus the budgeted selling price. Then we need to multiply with the actual quantity sold. So if the situation is favorable, that means what I have been told in the first slide of this video. So how to decide whether the variance is favorable or adverse? So if results are better than expected, then variance is favorable. If results are worse than expected, then it is adverse. So here, if in sales price variance, if you your result is better than what you have been expected, in that case we will keep the word F, letter F after the difference amount. So how this favorable situation arise? So you need to figure out the reason. So in the F2, it will be given in the MCQ type, but for the F5 student, you might need to figure out from the scenario given, then you need to draft the answer in the section C part of the question. So these are the possible reasons which I have been listed, like your selling price is higher than the budgeted. That means your result is better than what you have been expected. So higher than expected. Sorry. This is for the price. Yeah, that could also be the possible reason. So now, why you will be charging higher price? You know that there is inverse relation between the price and the demand. So if you are charging the higher price, your customer might shift to the competitor who are charging the lower price. So why you are charging the higher price? To be the we got to know that in order to be the favorable situation, our expected result should be more better than the expected one. So that means we might have charged the more selling price to the customer. That's why favorable situation arise. But why we have been charged? We need to figure out those reasons. So there might be a certain quality or feature in the product which competitor is not been offering to in their product. So it could be the possible reason, or what we can say is that our demand for the product is more. That's why we need to charge a premium price to the customer. That could also be the possible reason. And other is that our competitor might be selling the lower quality product. That's why the customer is not going there to buy those products. So that's why our demand has increased, and due to demand being increased, our we have charged certain excess price to the customer. So this could be the possible reason, and you need to find out if you are F5 student, then you need to find out from the scenario given. Okay, so now let's talk for the adverse one. So what could be the possible reason if the situation is adverse, means actual result is worse than you have been expected? So that means your actual selling price is lower than the budgeted selling price. So in that case, these are the possible reason, and this is opposite of the favorable one. Okay. So sorry. Yeah. So you could see here, higher than expected or anticipated customer demand will lead to favorable situation. But if there is lower expected or anticipated demand from the customer, in that case situation will be adverse. And other could be reason we like competitor demand, product demand is more than or quality of the product is not good. That's why customer is not buying the product, or we are charged. That's why we need to charge a lower price. This could be the possible reason. So now come to the sales volume variance. So we know the formula. This is the formula to calculate the sales volume variance. So now if our situation is favorable, so what could be the possible reason? Again, the reason is lower price. So we have charged lower price due to our demand has been increased, and due to demand being increased, our actual quantity sold has been increased, and that's lead to give this favorable situation. So remember, if you are trying to increase the volume and reducing the price, then in that case your sales price variance will be adverse. But if you are trying to improve the quality and you are charging the premium, in that case your sales price variance will be favorable, but sales volume will be adverse. So there will be one favorable and one adverse situation, what I want to say. So other possible reason could be to increase in your actual quantity sold is you have improved your quality as compared to competitor one. So that's why customer loves to buy the product from your stores. And the fall in the quality or performance of competitor product, not our. Okay. And other possible reason could be like we have done lots of advertisement, and so that's why successful market campaign lead to the favorable situation. If we talk about the adverse, it will be opposite one, that we have charged the higher price due to customer demand has been decreased, or our quality of the product is not enough good. That's why customer is not buying our product, or competitor product quality is very good as compared to our one, or there is unsuccessful market campaign. So this is the case for the adverse one. So you need to figure out this reason from the scene given in your question, and then you need to explain. So this is for the sales variance, that there are two variants in the sales variance, that is sales price variance, sales volume variance. Adding these two will give the total sales variance, and in both of these variants, that the sales price variance and sales volume variance, there is adverse and favorable situation, and I have explained the causes of the same. So now material variance. Again, in the material, if we talk about the total material variance, there are two variants. That's the price and the uses. And so for this, you need to subscribe my channel and share it among your friends, so that you will, and don't forget to hit the bell icon so that you will be stay tuned with the you will get notification first when I will upload the video. So stay tuned for the material variance video. I will upload soon, and let me know in the comment box how you understood this topic. So thank you so much guys. Have a good day.